Hey traders, welcome to this analysis. Just going to cover the New Zealand dollar against the US dollar before we start our live room later with our Academy members. Don't forget to get my free training underneath. You can also join our live room later today too. We'll be going over everything. So, New Zealand dollar against US dollar in a directional bias. I've spoke on your New Zealand dollar quite a few times. Many of you who follow me have gone over my videos. Will know I called it short at various points. It is now the time, in my opinion, to kill those shorts, because what's happening is you're coming to some higher time frame support. Higher time frames, generally speaking, rule the market. You will find that they drift between price action areas on your all the way up to your yearly, 5-yearly, your monthly, and downwards. Okay, every single time frame and the price action areas that exist on it are correlated and relevant. So you have got a fall. If you did have it short, you could consider locking in gains. That's another option. So you would have a stop somewhere higher so that if the market does come back up, it will just kill out for gains. But nonetheless, we called it short. That was really good. We did it in line with long-term and mid-term downtrends, if you like. You know, you could draw something along these lines, maybe similar to that. Okay, you had it like this before. Of course, then what happened was you had your higher high. So of course, if this comes up higher, it would then be a newfound uptrend. But overall, we're downtrending. You know, you don't have to be a genius to see that on the very long term. You could just draw a simple line like this, okay, and you would see that you would have to forego that one, but you would be coming down. Or if you just put your time frames up higher, okay, like your weekly, for example, you can see clearly you've got lower lows over time, and it's a lot more steep when you look at it like this. So it's a lot more of an accurate downtrend. So I mentioned shorting it within previous price action levels. You had them all along here. That was great. You had rejection. You therefore went short with a reasonable size based on your equity, I hope. Of course, that's what I mainly go over. But you're now falling. So what do I like in the future? Well, within these long-term downtrends, believe it or not, you can get long, okay? And you can trade the other side. You could have done this where I've just labeled here. That was very ideal because you had so many points where you could have exited for gains. Now, the reason why I don't use stop losses, oh my God, yes, I know, I said it, I don't use stop losses, is because I can take small trades with very small sizes across a diverse portfolio, and I can hedge. And this was a time I could have hedged, and I did hedge many, many times, okay? It's easily done, all right, when you have these areas, because what happens here is you start to range and you go sideways before the market sort of confirms, if you like, that it wants to go lower like this and continue that down move. So given you had all that rejection before, it wouldn't entirely shock me if that becomes the case again. Okay, markets repeat themselves for a reason. It's all about where people have taken a preferred price. It's not just a cliche saying, it's not just some random fact that perhaps people, the market just suddenly repeats itself. It is from the fact that people pull their orders in and out in preferred areas. And since you can see clearly that was a very much preferred area for longs like this, it leads me to make an educated assumption, if you like. Now, that's not good enough really on its own. You need plans for that, okay, risk plans, etc. But just as a long bias, a directional bias, I wouldn't mind it there. You did have changing inflation data lately slightly higher, okay, so the Fed slightly more cautious. That's why you're feeding in with, the way this is going, US dollar strength, okay, because they're sort of saying they're not going to slam rates down or they're not going to ease, and people would rather invest their money. They essentially is what's going on. So what I would do is I would start to gauge this as a long zone. It's very much ideal. And like I said, in a long-term downtrend, it doesn't mean you can't buy. It just means you need to do it in the right size at the right time. And you've drifted and drifted and drifted at this point. Okay, so I wouldn't be shocked if you get a bounce soon and further down. In regards to shorts, really you would need a significant push up, and I would look to just continue to trade it within that long-term downtrend I specified previously. So that goes in line with, the fact we've gone down for a considerable period of time. Okay, depending on the periods you pick, you can draw that slightly more accurately, because of course you have this anomaly where you get whoosh straight back down and then you continue as you were. So this was very key. We mentioned that before. If you do get back nearer here, it might slightly surprise me, but in any case, I would rather just buy it as it falls and look for those value areas and price action areas alike. So bias really coming into the near term is going to be long on the New Zealand dollar. Just be careful with your sizes, etc. So thanks so much for watching, guys. I hope that helps. Of course, you can leave any comments, questions if you have them. Don't forget to get my free training. Join our training room underneath. I'll see you in the next one. See you there.